Greetings to everyone. I am Arnaud Delapierre and I am happy to be with you. Today, we are going to talk about an exciting topic, ETFs, also known as trackers. Why this enthusiasm for financial instruments? What advantages can they bring to your portfolio? In this video, we will review the definition of an ETF, how it works, and the reasons that motivate some investors to be interested in it. The objective is clear: to help you better understand this type of product. Stay with me until the end, because I will allow you to gain confidence and expertise to boost your investment strategy. ETFs appeared in the 1990s at a time when investors were looking for more flexible and less costly alternatives than traditional funds. The concept is simple. An ETF mirrors the performance of a benchmark index like the CAC 40 or the S&P 500, for example, with fees often lower than an actively managed fund. This approach has attracted many traders and savers because it makes investing affordable and extends possibilities across different market segments. Thanks to these products, it becomes easy to allocate your capital and track the progress of a targeted index. Unlike a traditional fund, the ETF is traded on the stock exchange throughout its session, like a stock. Its price fluctuations depend on the value of the index it follows. The idea is to reduce active management and limit fees for investors. When a fund giant seeks to beat the market, the ETF aims to replicate an existing index. This functioning allows for greater operational simplicity, as one buys and sells an ETF in real time. We then take advantage of continuous quotation, transparency on the product's composition, and expanded access to various sectors. A quick aside: before continuing, I want to introduce Notrade, a free application available on iOS and Android that provides you with clear and easy-to-follow trading signals. With its user-friendly interface and alert system, it facilitates decision-making for all those who are looking to act at the right time. It is a tool designed to simplify for those who want to follow stock and crypto indices with interesting features to obtain reliable information. If you want to discover new opportunities or stay informed about market movements, Notrade can certainly give you that little boost. The advantages of ETFs are numerous. First, their management fees, as I was saying, are lower than those of an active fund, which can translate into a better net return for the investor over the long term. Next, diversification is easier. A single purchase can provide access to hundreds of stocks or bonds. One can benefit from often high liquidity, allowing entry and exit from the market almost instantly. Finally, there is transparency. The composition of the ETF is known and updated regularly, which reassures many people who wish to understand where they place their money. There are several categories of ETFs, each meeting specific needs. Some follow a general index like the MSCI World, while others target a specific sector like technology or health. There are also bond products oriented towards loans, state, or corporate bonds. Then, there are those that focus on certain geographic areas or on strategies based on business capitalization. This variety allows for building a customizable portfolio suited to one's goals and risk level. By combining different exchange-traded funds, one can aim for a balanced allocation complementing other existing investments. One aspect often discussed concerns the replication method of the ETF, physical or synthetic. In the first case, the manager actually holds the securities composing the index, tracking, which provides a direct and exact match with the desired performance. In the second case, the ETF uses derivative financial instruments to mimic the index. This can lead to precise tracking, but involves a higher counterparty risk. Before choosing an ETF, it is therefore wise to check the chosen and used replication method. Each has its advantages and limitations, and your comfort with risks will play a role in the final decision. Personally, I prefer the first option. In terms of fees, it's important to distinguish between transaction costs and annual management fees. Transaction costs pertain to buying and selling on the stock market, including brokerage commissions. Management fees, on the other hand, are directly deducted by the issuer of the ETF to cover its operational structure. These fees often remain quite low compared to those of traditional funds. However, it is important to check the total expense ratio, the TR, in order to assess the total deduction from the investment. Discrepancies sometimes exist from one issuer to another. You must take the time to compare before getting started. To choose an ETF, it is useful to consider several elements, such as the liquidity of the product, its trading volume, its fees, and of course, the reputation of the issuer. The size of the fund and the history of the tracking can also give an indication of the quality of the management. Also, take a look at the gap between the price of the ETF and the actual value of the index, because a significant gap can reflect an additional risk. Also, do not overlook the trading currency, which may bring an exchange risk. In short, take the time to carefully check these points before investing. Some investors prefer an approach known as core satellite portfolio. They use an ETF encompassing a broad index as a stable base, then add a few more specialized ETFs to target growth segments or specific sectors. Others, seeking income, choose high dividend or bond exchange traded funds depending on the desired goal and acceptable risk level. By regularly adjusting its composition, one can refine the allocation among different asset classes. The ETF fits well with this logic by providing access to various exposures and limiting the costs of portfolio turnover. In their enthusiasm, some forget that not all ETFs carry the same level of risk. Leveraged or inverse products can amplify gains, but also losses. They are generally designed for short-term and are less suitable for a buy and hold strategy. Furthermore, thematic ETFs, which are highly specialized, like those dedicated, for example, to exotic sectors, can have high volatility and trading volume limited. Before being tempted by a catchy name or a promise of quick returns, check the actual structure of the ETF and the targeted investment horizon. Taxation is a point not to be overlooked as well. The gains made on the ETFs are taxed as capital gains or dividends, depending on the structure of the product and the type of distribution. Some ETFs regularly distribute income, while others reinvest it, which can differ in terms of taxation. It is therefore necessary to inform yourself about the tax treatment of each ETF and ensure that it aligns with your personal situation. Do not hesitate to consult a professional to avoid unpleasant surprises. A good understanding of the tax framework can influence your choice and your net long-term return. Among common mistakes, there is the tendency to multiply positions without logic, at the risk of dispersing and paying more fees. Some investors only look at past performance, forgetting to analyze the product's consistency with their goals. Others are fooled by a catchy name, while the actual composition of the ETF does not always match what one imagines. Finally, do not bet everything on a single asset. Even if it is very popular, it is better to diversify your investments to reduce vulnerability to market fluctuations and avoid unpleasant surprises. To start, you often only need to open a securities account, or in some countries like France, a PIA, with a broker offering a wide range of ETFs. Once your objectives clarified and your budget defined, you select the products that suit you perfectly while ensuring sufficient diversification. Online brokerage platforms generally offer tools to filter and compare different ETFs, fees, performances, return, past return, ongoing, etc. Before confirming a purchase order, always check that the ETF aligns with your investment plan and risk tolerance. Anticipating these upcoming market movements is also part of careful and thoughtful management. Thank you for watching this video, which is an introduction to ETFs. I hope you now have a clearer understanding of the definition of these products. This channel is dedicated to ETFs, so feel free to subscribe to follow the growth of the channel but especially all the videos that will help you in your strategy to build an ETF to a position of quality. We'll meet again soon to delve deeper into other aspects of the stock market sphere and help you progress in your investments. See you soon, and until then, stay cautious and perseverant.